Hi and welcome to the Market Alert for Monday, the 10th of January 2022. So Nasdaq suffers worst start to the year since 2000, rates risk and parity routed. What Santa Claus giveth, J. Powell taketh away, which he is certainly going to do if he's going to continue down this line of rate increases. However, a bit of bright news, December payrolls miss again, just 199,000 jobs added. Should have been 426 as unemployment rate tumbles. So much for the whopper of a jobs print, which never happened. It was incredible. I'm sure they will adjust this, though, for the next one and say, actually, it was 320,000 and do whatever they can. But, it was what I mean by good news as well. It is for Powell, because at least with 199 takes the pressure off a bit. So, but still looking at March for a rate increase there. Bit more bad news, shocking consumer credit numbers. US credit card debt soars most on record. Well, all of the stimmy checks have gone, haven't they now? And the reality is back. The consequences are dire as they confirm once again that the Fed is tapering, cuting and hiking right into a recession, absolutely. And if not, some sort of a reset. No news today, as you can see there. The big one this week is Wednesday. So let's have a look. Tomorrow, Fed, Powell is going to testify. But this is the big one on Wednesday. They're forecasting inflation to have actually dropped and steadied on the core CPI. So we'll see if this is the case or not. Then there's nothing else really for the week. But this is the big one, Wednesday at 1:30. So let's have a look at the markets. We'll start off with the Dow. Let's have a look at the monthly chart, beginning of the week, see where we are. Last week, the market attempting to move higher, and actually, I'll just grab this. It did put in a new all-time high. Let's just add this to the chart and remove the one below it. I'll tell you what, let's do it the other way around then, and let's just add that in. So we had a new all-time high in the Dow. You can see in the monthly chart, this goes back to the COVID pandemic. You can see how the momentum switched back to the upside, but notice here that we now have a couple first times since 2020 that we've got the momentum starting to slow a bit, looking a bit weakish there. And in the weekly chart, similar picture, bit of pressure on over here just before Christmas. In the last couple of weeks, the markets managed to move higher. Again, we've got that all-time high sitting there. At the moment, all of the averages are lined up, 5 above the 20, 20 above the 50, and the 200, which is tucked away, miles away down here. There you can see it there, which will take a moment or two for that one to catch up. So, long term still fine, but a bit of a problem shorter term. As you can see, the market putting in that new all-time high. But as you'll see there, we've had a bit of a switch in the momentum. At the moment, the market taking out the 89, drawn from there back to there. There was a bit of demand, but the market didn't hold. So let's just have a look here and draw in from this low to this high, and you'll see we're bang on 38%, which is on the 20 bar moving average as well. Need to close above the 5 bar moving average to send the momentum back to the upside. And should this be the case from here down to Friday, these are the upside fib targets should the market move up as well. But there's no news today, so there's no reason for the market to be forced lower. Momentum is certainly waning slightly, and we had some divergence as well, which you'll see here where the market's coming down a bit and we moved up. So lack of momentum at the moment on the upside. This will need to turn in the stochastics to match any sort of move to get back through to the all-time highs now. In the 30-minute chart for Friday, you can see it was pretty wild. The market up to begin with. Then we got the news. The market traded sideways following the news. And there you can see. And then it was hit, and down she came all the way back down. And we've now got, that was down to Friday's low. We've got a new low down here where the market's currently bounced. And the moment is struggling with the DP, the 50 bar moving average, and is looking fairly weakish there, and also the close. So turn around when the futures market kicks in, and also when the futures market kicks off at lunchtime as well. In the German DAX, somewhere around here, let's have a look. Let's kick off again with the monthly chart. It's always good to see where we are in the bigger picture. And like the Dow, you can see they're back to 2020, the COVID sell-off. The market, then the momentum switching, you can see all of that sideways through here of winter last year, and then also we've risen a bit as the market moved higher, but again you can see we've got a divergence issue here where the momentum's dying and the market moved higher up to November, December very quiet, and at the moment also showing weakness there. And also again we've got 3 reds on the parabolic there, a lot lack of momentum. So I wouldn't be surprised if this market actually made a new high first. If we just go to the weekly chart, we've got a 10-point difference between the all-time high that was made in November to January. So as I say, there's a 10-point difference there. Came within a whisker of it last week, but didn't quite do it. Needs to get above this if it intends to do so. Start of the week, Sunday night, is already showing the market wanting to move to the upside, and we've got everything pointing that way at the moment. But like I say, in the bigger picture, we are starting to see a bit of weakness around there. In the daily chart for the DAX, again you can see that now with the 10-point difference with the 2 real-time price resistance lines, the 10-point difference between the 2. We had some selling coming into the market. There we've got supply. Further selling on Friday after the NFP numbers. The market trading down to 78%, where it's found a bit of support overnight. And what I would be doing here is drawing back from the high to this low to see where the resistance lines are on the upside, given that there's no news today and the market would be free to move to the upside. In the 30-minute chart, which is the other time frame I like to have a look at, we saw the market move lower to begin with. It then came back. You can see 78% there to the 50 bar, closed back below the 20, moved down. This is the NFP numbers. And the market tried to hold for the second 30 minutes after the Dow, or before the Dow opened, and then followed suit thereafter. Market gap down on the DAX, as you can see there, nice clear gap, but the gap has been filled. Same picture as the Dow, trading up to the DP, resistance at the DP, and also the 50 bar EMA there, where the market's struggling a bit. Momentum to the upside, we've taken out that divergence that we've got there, but sideways. It's been sideways for a while, as you can see there. And in the 2-minute chart, we can see that early on in the morning we've got the future session here, the market coming back here, and you can see the fib retracements throughout this, all of the averages together there as well. Market closing through there, and the market driving down. We then can see the 8 o'clock kickoff as this big bar here. We had the selling, market down, market back. Let me just draw this one in for you. So from here down to here, you'll see the market stop at 78% there, and then we have a signal, the market moving lower. Good sell-off there down to the low, and we actually went through the low as well. We see the buying coming back in here, and then we get the close above the 5 bar moving average there for 46 points. We then get a situation where we go from here to here. You'll see the market coming back to 78.89. The market will do this again in its sideways move from here to here. You'll see this here, and then eventually we break back above the low, which, like I've often said, you want to get the market back above the low if you can, in order to maintain that bull market in the daily chart. You then get the NFP numbers, not good. Market drops 100 points. The afternoon, the Dow started off fine. The DAX followed. We had a trade here, which unfortunately just got within a whisker of the scalp. We can see there's selling pressure or supply coming into the market there, but unfortunately it did a reversal straight away with a 20-point loss to come off the 46 profits. The market then traded sideways and then broke to the downside following the Dow. And finally, in the metals, we can see that we've got silver moving up on Friday because of the poor numbers, which was good. But this low will be taken out this week. Don't worry about that, because if the CPI numbers come out less than forecast, then silver will be hammered to the downside. It would have been on Friday, but 199 against 426. They couldn't get away with that one so blatantly. But let's see. The market needs to come back on the stochastics. It's a very good one for on the daily chart for seeing where stochastics are and how they play out nicely in the silver market. So from a technical point of view, we need to come back down to the oversold area anyway. Intraday, this was the news. The market shot down and then it started to make its way back up. Again, you can see the retracement. And now overnight, you can see how we're coming back down to the DP. It needs to hold at this level, but I suspect that it won't. In the gold market, holding a lot steadier. And just to prove my points that the silver one is being hammered and manipulated, we've shot straight up on the overnight there. Look at that. We've gone up from 79 to 80 already on the gold silver ratio, and you can see the volatility in this even as I'm recording at 10 to 7 in the morning. So it's going to be an interesting day on the metals. Gold holding steady, like I say, because you can see that in the gold silver ratio. Could do with this pulling back a bit more. I'm surprised it hasn't, but at the moment it seems to be favoured over silver, and the dollar is moving back to the upside as well after Friday's move to the downside there. Okay, that will do it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next.